Hey everybody, Coach D here with TackleTrading.com. Just wanted to give you a quick post-market update. Just watching the market into the closing bell. And I just wanted to point out what I see in the chart and why I believe this rally might be a little suspect. Not that it can't continue, but I just want to make sure you understand the signs. So I've got a chart of the S&P mini index up here, and again, nice, strong, moving recovery. So again, we've been talking a lot about, of course, the big correction. We've identified the double bottom. That's a nice support zone, and we've been watching this rally really just rocket up this week. Really nice recovery for the market, which has got a lot of people feeling good. And again, yesterday I talked briefly just about the fact that people have a lot of hope that the market will continue to rise. And then there's some people who are, again, I'm a little suspect. I have my suspicions, so it's a little suspect here that it could rise. Now, of course, the market can go either way. But today's candlestick, this little candlestick right here, of course, is a known doji. So a doji candlestick, literally what it means is that it opened and closed at the same price point. Now, doji candlesticks frequently occur on tops and on bottoms when prices slow down. And so really it's just basically saying the market was very indecisive today. Now, the doji being a potential reversal signal, is of interest. The other thing I would point out is that the volume is kind of back down to typical volume. So we had a really big influx of volume with the big downward sell-off. The two biggest points of volume came in on the days where support formed. You'll notice that right there. So we've got that support. Now, again, watching this rise up, and we had some pretty good momentum candles right here, pretty good momentum candle right here. And then today being a Friday, I'm not surprised to see the doji kick in because people should have been looking to take profits. Now, it's coming in at this 27.50 mark, kind of ballpark, and it's not really in a kiss goodbye setup yet or anything like that, and it could go either way. I'm not predicting a direction here. I'm just saying this could go either way, and the doji really lends itself to that belief system, to that concept. If we drop it down intraday and we look at it, we did clear that resistance point I was talking about yesterday, which gives the market some potential upside potential there. It's got potential upside potential. That cracks me up. It's got some upside here where, again, it broke above that resistance and it's retesting. But there's other support resistance zones that it can run into that it can bang its hand against. Fat numbers like 2750, 2800. The other big kiss goodbye, support zones clear out here above 2800, 2825 or so. And there's certainly potential for it to reverse. We're seeing a bit of a rising wedge pattern on the intraday chart. And a rising wedge is essentially a slowing momentum pattern. And again, that doesn't mean it's going to reverse. It just means that it's slowing down. So prices are slowing down on the daily chart. And again, heading into an extra, I think we got a 3-day weekend here. Markets closed on Monday. So we don't have to worry about this too much. This is still moving because we got the futures going. But I wouldn't be surprised if we saw the market reverse short term. I also wouldn't be surprised if the market continued. And really, at this point in time, I'd probably say, look, don't overthink it. If it breaks above the candle high, people are still buying. If it breaks below the candle low, people might be starting to sell. And if we look at it in the context of history, one of the reasons we're talking about this is because this is a weekly time frame, but we can look back over previous market corrections. So let me go grab my drawing tool here so I can just highlight some of the market corrections we've seen. And they typically come and drop, rally, and drop. It's not normally a straight up recovery. So, we got the drop, rally, drop pattern. Again, here's another big correction. Drop, rally, drop. Puts in a double bottom on a bigger time frame, again, a weekly time frame. So again, just really looking at the bigger corrections, not them small typical pullbacks. Here's a bigger one that actually did rocket out as a V. That came out and actually just recovered really, really quickly. That's back in 2014. But again, drop, rally, drop. And again, that's on a weekly time frame. So that's drop, rally, kind of 2-week recovery, 2-week drop. 2-week recovery, 2-week drop. Those are very, very common after big sell-offs. So fast forward to current day, here's the drop on the weekly chart. We might see a rally. Wouldn't be surprised to see another drop. Now, there's nothing to say that it can't just keep rallying on out. But if you look back at the last, 5 recoveries after the, market corrections, only one of them rocketed straight back up. The rest of them took about 4 to 8 weeks to actually, do the little drop, the rally, the drop, and to actually head into recovery. So that being said, just take this little signal right here, this little doji, again, doji candlestick. The doji candlestick is just a warning sign to us that the momentum slowed down. It's on a Friday, so we won't really be seeing this until next week. The market, lots of things can change over the weekend. You could see international market conditions change. But the market relatively quiet today, typical volume, open and closed at the same price, which means a little bit of indecision. We'll see how traders feel next week. And this has been Coach D with TackleTrading.com.